I'm pleased to introduce our esteemed presenter, Jeff Lackey, Director of Relationship Management at Sallie Mae. Jeff has brought Sallie Mae several years of experience in higher education industry, as well as a significant experience in other highly competitive industries. Most recently, Jeff was a Director of Financial Aid at Peninsula College in Port Angeles, Washington, and is involved with the California Association of Student Financial Aid Administrators Graduate Committee. In his role at Sallie Mae, Jeff is a Director of Relationship Management and oversees school relationships throughout California, working with college, university, and high school clients, as well as directly with students to empower confidence in their educational journey. And with that, Jeff, take it away.
Excellent. Thank you, Will. Thank you, Karen. And thank you everyone for joining tonight. Let me go ahead and share my screen. Will or Karen, if you wouldn't mind letting me know when you can see the screen.
We can see it.
Great. Perfect. Okay. And I am going to just for sake of bandwidth, I'm going to take myself off of video during the presentation, just in case, we just save on bandwidth and such like that. Again, thank you very much for attending tonight. We've got a lot of information to go through, exciting information. This is information on how to pay the remaining balance of your college experience. And so this is going to be, an overview of the various different funding options that you have available to you, what you can kind of be focusing on, what financial aid offices will kind of determine for you based on some documents that you may file and such like that. So without further ado, let's go ahead and get started. So tonight we're going to be covering some college basics. We're going to be exploring some student loan options. We're going to be talking about how to fund the remaining balance, thus the title of the presentation. And then we're going to be talking about some tips and recommendations, some things that you ought to think about or might want to think about in all of the different types of funding options that you can have. We're going to be talking about traditional college information, but a lot of times, especially in this day and age where, maybe people are exploring other different types of funding options other than like a loan per se, or maybe utilizing investments and such. We'll just kind of touch upon that again. And one of the things I want to stress is that I'm not necessarily a financial advisor or a financial planner and such. So the information we're providing tonight is going to be, like I said, an overview. And if there are other types of options out there that you would like to explore a little bit more in detail, we'll certainly tell you where you can maybe get some of that information. So let's go ahead and dive into it. Let's go ahead and give a little bit of a backdrop or some overview in regard to where we're at within the college funding process. This graph here is going to talk about some of the sources that funding families have relied on in order to cover the cost of their education. As always, you can see here in the graph, families relied on a variety of funding sources. On the right are 6 funding sources that families can use. And you can see kind of starting with the coral color, that's going to be your free money. That's going to be your scholarships and your grants. And then family resources in blue, including parents' income and savings, as well as students' income and savings, kind of in that lighter blue. And then parent borrowing, student borrowing, and then finally funds from relatives and friends. In academic year 22-23, a family's out-of-pocket contributions covered more than about half of the college spending. You can see 40% and 10% respectively, totaling about 50% came from out-of-pocket contributions. While scholarships and grants covered a little more than 29% on average. Borrowed funds covered roughly 19% of college costs, with the remaining 2% being covered by relatives and friends. So think of it as like, gifts, gift money or something like that. Over the last couple of years, however, though, families have used similar strategies to pay for college, but the trends are going, what I think is for a positive or in a positive direction. In our study that we've done in years past, How America Pays for College, the blue sections were higher percentages. So essentially the amount of money that was coming from out of pocket from parent and student savings and income is actually trending downward. And in so doing, we see in the choral section, scholarships and grants is trending upward. So that's a good sight, knowing that basically what we're finding is that students and families are taking advantage of more scholarships and grants to help fund their education, and it's taking less of a burden off of the family contribution. Um, so there's a lot of things, kind of do a little bit of a backdrop as to why we're here and what you would be going through when you're looking at schools and such. And there's a lot of things families should consider when selecting a school. The most obvious one, and that's a lot of the reason why we're here tonight, is going to be based on costs. What we'd like to do is urge you not to, get that sticker shock, essentially. Like if you're shopping for a car, for instance, we see one price and then you see the price that you actually pay. So we want to try and avoid sticker shock. Schools are required to publish a cost of attendance, which are things directly billed to you. Think of like your tuition and fees, your housing and food, or housing and meals if you happen to live on campus, and things that you'll have to pay for but that aren't billed directly to you. Maybe like your books and your transportation costs, or your housing and meals or food if you happen to live off campus. That would be indirect costs. Those charges billed directly to you by the college or university is what we call direct costs. And you can see them on the left in this slide. For those that you'll incur, but the school doesn't bill you for, are what are called indirect costs. And so, determine which costs are going to be direct or indirect for you, and then determine if there's a ways to kind of cut those costs. Potentially commuting from home if that's important or possible. Maybe, transportation, for instance, relying a little bit on public transportation if you happen to live off campus and maybe you're close to a commuter line or something along those lines. That's something that you sometimes will have direct impact with, is some of these indirect costs based on your living, your lifestyle. Direct costs, those are obviously going to be more associated with what the school or the university or college bills directly to you. So there might be less flexibility on what you can do to control the direct costs. So let's discuss a little bit about the net price, excuse me. Everybody wants to know what their out-of-pocket cost is going to be. And this is something that is often referred to as the net price. This is the actual price you'll pay as opposed to the sticker price or the cost of attendance, like we just mentioned before. This is a big reason why we encourage folks not to get sticker shock. Is a lot of schools will offer scholarships and grants to help reduce their sticker price and help them make college a little bit more competitive or make the price more competitive. The cost of attendance or the sticker price isn't necessarily what a student will pay. The formula is pretty straightforward. It's basically cost of attendance minus any grants and scholarships, which is going to be the true price of the college or university that you're attending. However, this can kind of be hard to get at if you haven't completed a FAFSA. We'll talk a little bit about what the FAFSA is in an upcoming slide if you're unfamiliar with what the FAFSA is. Because of that, schools are also going to be required to publish what is called a net price calculator, which is going to be specific to their college or university. And this helps families understand the true cost of a college based on a student's eligibility for federal aid, as well as grants and scholarships awarded by the college. You can usually find a school's net price calculator by going to a school's website, and you can just go up to the search bar and type in net price calculator, or it may be on their admissions webpage or their financial aid page. But if you're having trouble finding it, you can always go to collegecost.ed.gov, and you'll see that link in the blue box down at the bottom of the slide. If you go out to that website, you're going to find that you can search by your specific college's net price calculator and then estimate what your net price is for that school. And again, the net price is the idea behind it is that it helps families understand the true cost of a college based on a student's eligibility for federal aid, as well as grants and scholarships that are awarded by the college. So talking a little bit about, when you're looking at financial aid options and you've got a plethora of different types of options out there. Some are loans, some are grants, some are scholarships, some is work study where you have to have a position or a job and you have to try and earn money for it. What we want to do is we want to make sure that we stress what we call our 1, 2, 3 approach. And hopefully tonight, after you get done taking in all of this information, you'll see and have a better understanding what the 1, 2, 3 approach is. But essentially, the 1, 2, 3 approach is starting with money that you don't have to pay back and supplementing your savings and income by maximizing scholarships, grants, and even maybe work study. Number two would be exploring your federal student loan options, of which, again, about the FAFSA, we always encourage students to explore their federal student loan options and other types of aid options by completing the free application for federal student aid, or FAFSA, FAFSA. And then third, if you still find that after you've exhausted those two resources that you still need additional monies to help complete the funding of your education, that's when we would consider looking at a responsible private student loan, or other types of options. Filling the gap between available resources and the cost of college is exactly what private student loans are designed for. And we always encourage students and their families to evaluate all anticipated monthly loan payments first, and understand how much the student expects to earn in the future before considering a private student loan. So let's go ahead and dive into step one of that 1, 2, 3 approach, and that's going to be scholarships. We're going to touch upon them. We're not doing a massive deep dive into scholarships, but if you kind of know a little bit about them, but you're kind of unsure as to how they work within the financing or funding of education, we'll certainly cover that. First off, scholarships are financial aid awards that do not have to be repaid. They are free money. A scholarship might cover the entire cost of your tuition, or it might be a one-time award of a few $100s. Either way, it's worth applying for because it'll help reduce the cost of your education. If you're wondering when you should apply for scholarships, well, each scholarship is going to have its own unique requirements that indicate who qualifies and how to apply. It also depends on the scholarship deadline dates. Some deadlines are as early as a year before college starts. So if you're in high school now, you should be researching and applying for scholarships during the summer months, as well as, starting pretty much anywhere between your junior and senior years, but definitely starting that summer between your junior and senior years. If you've happened to, we're coming up on that window now, but if you're a senior and you're thinking about attending college, or you're planning on attending college this fall, don't give up. The scholarships are available all times, all throughout years. Every month there's scholarships that are available. Look at the scholarship information to see which ones you can still apply for. And we'll kind of give you a couple of ideas as to where you can look for scholarships in the upcoming slides. You may be asking how to apply, where do I need to go and such. Well, it's going to be a little difficult because each scholarship is going to have its own requirements, and scholarships websites should give you an idea of who qualifies for the scholarship and how to apply. Make sure that you read the application carefully, fill it out completely, and meet the application deadline date. And again, to stress, there's not going to be a hard, fast, and set date for all scholarships. It's going to be based on the donor and the foundation that potentially is managing that scholarship as to when the application window is open and when it closes. So these are something that if you've got any free time at all, that you can be exploring on your own. And again, a couple of slides later, we'll talk about how you can do that. So let's talk a little bit about some of the scholarships that are available. Some people believe that scholarships are only for athletes and scholars, and in some cases that is true, but there are so many other opportunities. And in fact, you wouldn't believe the types and the number of scholarships that are available. There's scholarships out there for almost every skill, every interest, hobby. There's a scholarship out there. I've seen scholarships for tall or short people. I've seen scholarships for volunteering. I've seen scholarships even for slam poetry, filmmakers. I mean, the list goes on. The challenge is to look for the right scholarship. And it can take a little bit of time, but students should realize how important this free money can be. Obviously, the more free money that you can get for college, the less you'll have to borrow or the less you'll have to use out of your own out-of-pocket funds that you have available. Scholarships, they can be awarded for a variety of reasons. And as you can see here on the list on this slide, there's a tremendous amount of reasons why scholarships can be awarded. And you can see, like I said, some of them are based on academic achievement, some of them are based on sports or a talent or skill. And those are kind of the adage that we knew of scholarships in the past. But again, community involvement, organizational leadership, there's scholarships based on school activities, scholarships based on ethnicity, your religious affiliation. Parent affiliation with work or club or an activity, this is growing in popularity quite a bit. If you happen to be of age where you're dependent and you have your parents that potentially work at an establishment, maybe they offer a scholarship. You certainly could be eligible for that being a dependent of them. So certainly research that and see if that's something that you could take advantage of. And remember, scholarships do not require repayment and they're typically awarded on an annual basis. So again, this is free money that does not have to be repaid. So let's talk about the many resources for scholarships. We talked about a few of them on the previous slide. Let's do a little bit deeper dive. The local communities and community-based organizations have scholarships available. We've already kind of talked a little bit about federal and we haven't really touched upon state agencies, but federal and state agencies operate very similar in that you typically, in order to be eligible for a federal or a state type of scholarship, you have to file a document like a FAFSA, or you have to file maybe call it, a California Dream Act application or so for the state of California. There are some scholarships offered at the federal and state agencies, but the vast majority of scholarships are going to be offered by your local or your community-based scholarships, as well as the college-specific scholarships where you're interested in attending. So definitely touch base not only with your admissions department at the college you're interested in, but if you know kind of what you think your major is going to be, reach out to that specific school as well. There can be multiple sources for scholarships on a college campus. So you'll definitely want to explore that. As mentioned on the previous slide, religious organizations have scholarships available. So whatever your designated house of worship is, parish or congregation or temple or shrine, any of those, certainly not only look at it from a local perspective where you may physically attend, but look at it either at a regional or even maybe at a national organization level. Sometimes scholarships can be offered from a national level, and that information may or may not be communicated down through the local or neighborhood parishes. So you'll certainly want to explore that as well. We talked about employers, but we haven't talked about employers for you personally as the student. If you happen to be employed and you certainly approach and see if your organization that you work for has a scholarship available as well. Libraries are an excellent source for scholarships. Think about from the standpoint of local or community-based scholarships. They have a scholarship available. They don't know where to advertise it. Yes, they can maybe go to the local high school, but let's say that you're not a traditional student and maybe you've been out of school for a couple of years. How do you learn about scholarships in your local community or your neighborhood? Well, by going to public places, libraries, city hall, such like that. Scholarships could be available there. So a lot of local community organizations or foundations will reach out to libraries to advertise their scholarship for them. So definitely touch base, not only at the library that you maybe in the neighborhood that you grew up, but if you happen to be attending college or university out of town, for instance, search that library as well. Private organizations, major companies, again, you don't necessarily have to be working for them. You don't have to necessarily have a parent that is working for them. There's a tremendous amount of scholarships that are being offered by private organizations and major companies as well. And a lot of those, again, very similar to local or community-based scholarships, they sometimes have difficulty advertising them. So what a lot of these organizations have done recently is they've turned to what are called online search engines. And online scholarship search engines basically aggregate scholarship offerings and allow users to be matched to scholarships, either based on a profile or some other type of information that they want to try and sort through in order to learn more about scholarships that are offered that could maybe have a better chance of winning because they meet more of your lifestyle, more of your profile. So having said that, again, we kind of talked about some scholarship search engines. Like I said before, they're really growing in popularity. The database and scholarship search engines are growing every day. And again, they house an aggregate list of scholarships, and they allow users to be matched to the scholarships based on the personal profile. So as new scholarships are added to the database, you can even possibly be notified of new scholarship opportunities that match your profile. So it's going to be dependent upon what scholarship search engine you want to use. But some of them have similar traits. And you can see here, that there are some search engines that are offered. The Cal Coast Credit Union Scholarship Search in partnership with Sallie Mae has over 3.5 million scholarships worth close to $18 billion, a little more than $18 billion. And you can see the link there too if you want, calcoastcu.org/scholarship-search. Certainly pursue that if you wish. And also too, here's a couple of other popular websites, scholarship search engines, FastWeb and Big Future. You can see some of their statistics there too as well. So here's a couple that you may want to be interested in taking a look at in the future. Some of the recommendations to have on scholarship search engines, you want to make sure that if it does allow for you to build a profile, keep that profile up to date, because scholarships are going to be available for every year that you are attending school, whether that be in your first year through your fourth year, senior year of undergraduate school, graduate school, professional school, continuing education, any type of degree or certificate program. Nowadays, there ought to be a scholarship that's available in all of those fields of study. So, it's not a season anymore, just to stress that. It's not like you go looking for scholarships during a particular season. Searching for scholarships is a year-round activity. Anytime that you have some free time or whatnot, and you want to pursue some scholarships and see what's available, this would certainly be a good or wise way to spend any of that free time that you have. So we've talked about a couple of different things here. We've talked about where you can find some of that free money. We've talked about some federal and state resources, and I've mentioned the term FAFSA, free application for federal student aid, a couple of times. Just to make sure that you understand what the FAFSA is, we're just going to talk about it here briefly. But basically, the free application for federal student aid, which again is known by the acronym FAFSA, that is going to be the first step in applying for federal, state, and institutional aid. Institutional aid being the college or university aid that you might be attending. It's perhaps the most important form that you will fill out to determine your financial aid eligibility. If you have not completed the FAFSA for the upcoming school year and you are planning to attend in the fall, you need to do that as soon as possible, as many schools have priority deadline dates. So if you haven't filed it and you're hoping to attend school in the fall, file the FAFSA as soon as possible. It is important that you complete the FAFSA, again, as early as possible each and every year that you apply, because some financial aid programs are awarded on a first come, first served basis. This FAFSA this year, or for this upcoming year, has been available as of December of 2023. So again, you'll want to apply as early as you can. If you apply late, you may find that you miss out on some funding options. But historically, and you can see here on our slide, historically, the FAFSA is opened roughly around October 1st of every year, with the exception of this prior year, it opening in December. So kind of put that in your calendar, look for October 1st of each year that you're planning on attending school to file that FAFSA. And again, the recommendation is that you file your FAFSA as soon after October 1st as well as you can. So from that standpoint, when you file the FAFSA, a couple of things that you'll want to keep in mind. Again, you will file a FAFSA each and every year that you are planning to attend school. This isn't just a one and done application. Also, too, don't assume that you aren't eligible for aid because your family's income is too high, because almost every student is eligible for some form of financial aid. Also, too, keep in mind that some scholarships are going to require that you complete the FAFSA, so you might be leaving money on the table if you don't file. You may find a scholarship that meets your profile perfectly, but they're asking for information from your FAFSA. So again, being a free document and such, you may want to consider just filing that, even if you don't plan on sending it to a school. Lastly, financial aid deadlines are not the same as the college admission deadlines. So make sure that you check with both offices or make sure that you verify with your admissions counselor that you're working with as to what your important deadlines are that you need to be aware of. Because again, the admission deadline and financial aid deadlines in the financial aid office can be different deadlines. So let's go ahead and shift gears and talk a little bit, now that we've kind of explored some of that free money, the scholarships, and of course, any type of grant aid that you can get with the FAFSA. Let's go ahead and talk a little bit about student loans. So we're going to start off with some of the federal student loans, and there's two types of federal student loans. There's the federal direct subsidized, and then the federal direct unsubsidized student loans. In both cases, these are student loans that are provided by the government, and they must be paid back with interest. Subsidized loans are going to be for undergraduate students only, and you have to demonstrate financial need. The borrower is not billed for interest on subsidized loans during an in-school period or a grace period. And a grace period is a period of time after you graduate before you have to start making or be required to make principal and interest payments, or essentially be paying back the loan. You can also have a deferment, and you cannot not be billed for interest during post-school deferments. So think about if you happen to be military active duty, for instance, and you get called up, or if you happen to decide that you want to go back to school, at least half-time status or more, 2 or 3 years after you've completed undergraduate schooling. If you qualify for a subsidized loan and you've started making your payments, but you go back to school and you've got an eligible deferment, the government will go back to paying or subsidizing your interest on that particular loan. Unsubsidized loans are going to be for undergraduate as well as graduate students. And students do not need to demonstrate financial need in order to be eligible. The borrower is going to be responsible for paying the interest during all in-school periods, grace periods, as well as any type of post-school deferment. So that's the big differentiator between direct subsidized and unsubsidized loans. One is need-based, the subsidized, and two, during periods of eligible deferments, the subsidized loans, the federal government pays the interest, and on unsubsidized loans, the borrower is responsible for the interest at all times. So you can see here, there are some annual and aggregate limits on how much you can borrow through these programs. Undergraduates have an aggregate limit of $31,000, and only $23,000 of it can be subsidized. You can see some of the information also too as well with some of the other aggregate limits. Again, the FAFSA is required on this. And one thing to note is that there is what is called an origination fee on these loans. These fees are going to be subtracted from the loan prior to disbursement. However, the borrower, will have to pay back the entire loan, including that origination fee. And you can see the origination fee up in the top right corner of that red box. It's 1.057% of that loan. And so basically, you as the borrower will have to pay back the entire loan, including that origination fee. The school will receive the loan proceeds minus this origination fee, so that you, the borrower, you don't get the full amount that you borrowed. Using the origination fee that we have listed, if someone were to borrow $1,000, they would be roughly charged $10.57 origination fee, and the government's going to round that up to $11. And because of that, the student will only have actually $989 applied to their account, but you still have to pay the full $1,000 plus any accrued interest. Borrowers are also going to be afforded a 6-month grace period. And again, we talked about it on the previous slide. A grace period is a time that you have a period between when you graduate or leave school before you are required to make principal and interest payments. And again, for those students that have unsubsidized loans, interest accrues through the grace period and is capitalized at the end of the grace period, and you're responsible for it. For those that have subsidized loans, the interest is accruing, but the federal government pays it on your behalf. There's also some various different repayment periods, as you can see here, anywhere from 10 to 25 years. And there's also various deferment options, in-school deferment, economic hardship deferments, military deferments, depending upon your situation. And then, of course, lastly, there are public service forgiveness programs that are available on these loans as well. So all in all, these, if you do have to borrow a loan, these are pretty attractive, all things considered. Let's talk a little bit about some of the other federal programs, and that is called the Federal Direct Parent Plus Loan Program. And this loan is designed for parents to help pay any remaining balance. These loans are going to be taken out by the parent, and they can cover the entire financing gap up to 100% of the school certified costs, minus any other financial aid that is received. So parents can request the deferment of payments while the student is in school, or parents, you can start paying on this loan immediately. Credit history is going to be considered, so parents do have to complete an application in addition to the student completing the FAFSA. So again, this loan is going to be in the parent's name and in the parent's name only. The student is not responsible for this loan. And there is going to be a bit of a credit history or a credit check essentially that's on this. In past, I've heard it described as a soft credit pull. So parents, again, you might also need to meet additional requirements if you happen to have some adverse credit history. Some other things to consider is that borrowers are obligated for the life of the loan and again, can't be released from the loan. And then again, I want to stress that this is a parent loan. So the parent, not the student, is obligated to the loan. And again, as you can see here, like with the subsidized and unsubsidized direct student loan, there is a fee, that origination fee that's attached to the Parent Plus loan. It's 4.228% right now currently and through the 30th of September that we know of so far. So again, you are going to have whatever amount that you ask for minus 4.228% sent to the school, but you will be responsible for paying back the entire principal plus any accrued interest. So very similar to some of the Parent Plus loans and such. We'll touch upon it here in a second. I mentioned in the past a couple of slides that the direct unsubsidized loan is also available for graduate students too. And I want to mention that there is no subsidized student loan option for graduate students. And again, remember, on unsubsidized loans, the borrower is responsible for the interest during the entire loan term, including in grace period, in-school period, as well as any other post-school deferments. And again, during your grace period, interest will accrue on the unsubsidized loan, and it is capitalized at the end of grace, which means the amount that you borrowed, the principal amount that you borrowed, and then the interest that accrues, they're kept separate until they are what is called capitalized, and they're put together. So essentially, you have interest accruing on its own, separate from the principal. When it does get capitalized, those get added together, and essentially when interest is accruing from that point forward, interest is accruing on the principal plus any accrued interest that is accrued in that period of time. So essentially you could be having interest charged upon interest for a short period of time, while you're in your repayment period, as you're paying back that loan. So basically, within these loans, again, the unsubsidized loan, very similar for undergraduates, there is an origination fee. And as discussed previously, this fee is subtracted from the loan prior to disbursement. A differentiator on here is the darker blue box, and that is going to be the plus loan for graduate students. So very similar to the Parent Plus loan that we talked about on the previous slide, there is a very similar program for graduate students. And so again, this loan is going to have a fixed rate and an origination fee very similar to the Parent Plus loan. It's going to differentiate just a little bit, but it's going to operate very similar. These loans, again, are going to be in the name of the borrower, which in this point is going to be the graduate student. It's not going to be in the name of the parent of the graduate student. So now, because you're a graduate student, you're considered independent. You are able to borrow this Graduate Plus loan in your name and your name only, and your parents are not a part of this. Again, just very similar to the Parent Plus loan, graduates and professional borrowers that are looking at a Grad Plus loan, they can request deferment of payments while in school, or you can start making repayment while you're in school immediately after the disbursements received at the school. And again, on the Parent Plus loan, similar with the Grad Plus loan, there's going to be a credit check that's performed on the application process. So if you do have some sort of adverse credit history, you may still receive a Grad Plus loan through one of two options. You can always obtain an endorser who does not have adverse credit history, And so, from that standpoint, think of an endorser as very similar to maybe like a cosigner, for instance. The federal government uses the term endorser, but it works very similar. An endorser is someone who agrees to repay the Grad Plus loan if you cannot or do not happen to repay it. That is an option that you do have with the Grad Plus loan if you don't happen to qualify for it with your own credit history. So again, this might be the first time that you run into an origination fee, so we want to make sure that you understand them fully. But you can see an example here of what a net disbursement example would be. On a federal Parent Plus loan or a Grad Plus loan, if you were to borrow $10,000, that origination fee again is 4.228%. So simple math on a $10,000 loan, that's roughly $422.80 that is deducted from the loan. So you at the school will only receive $9,577.20, but you're still obligated to pay the full $10,000 back, plus any accrued interest moving forward. So again, that's how an origination fee works. Private student loans, let's go ahead and talk a little bit about them. This is another GAP option, for instance. A responsible private student loan or a private parent loan is another source of GAP financing. And these loans are going to be funded by banks and credit unions, not by the federal government. A FAFSA is not required for these loans, and they are going to be credit-based. The repayment period and terms are going to vary from lender to lender, and private loans can also cover up to 100% of all of your school certified costs of attendance minus any other financial aid that you're receiving. And right now, currently, with what we've seen in the marketplace, most private loans have zero origination fees. Now, again, like I stressed at the beginning, this is going to vary between lender to lender, so you'll want to do your research. But essentially, there are zero origination fees on the private loans. So there's not going to be any need to borrow extra funds to cover those fees or having to make an extra payment at the school for the fees that were deducted, maybe let's say from a federal source. Because these are private loans and because they are issued by banks and credit unions and because there is going to be credit history that is part of the application process, a cosigner might be necessary. And some of you might ask again what a cosigner is. A cosigner is going to be any responsible third party. So it can be a parent, it can be a grandparent, aunt, uncle, really good friend, maybe even a spouse, for instance. If you happen to be going to grad school, for instance, the cosigner is going to be someone who would help secure the loan for you and would only be responsible if the student happens to fail to meet the payment obligation. In many cases, lenders will offer some sort of a cosigner release option after the student or the main applicant meets certain type of certain requirements, maybe making X amount of payments on time, maybe having a debt to income ratio run so that they can show that they're responsible for the debt fully now that they've completed school and that they've started their career, for instance. There might be the different types of qualifying requirements. So when students are applying for a student loan, they should always weigh repayment options. Should you make payments while you're in school or should you defer your payments? And this can even apply for like the federal Parent Plus and federal Grad Plus loans as well. Should I make payments while in school or should I defer it? Some advantages to paying while you're in school is you can be building your credit. So signing up for a payment plan where maybe like your monthly payments are due, that will help you build credit. And the credit report will help reflect these payments, when they're due, when they're received. And basically that's going to show a payment history. With a deferred loan, you can also make payments, but you are not building any payment history on the credit report. So if you happen to defer it, but yet you still want to make a payment here and there, it's not necessarily going to be reported to build your credit history. But then the flip side is that you may decide that you don't want to start in full principal and interest payments. I don't want to pay the entire loan back as soon as I've started school, but I could pay a portion of it back. You can see down in the blue box, there's a couple of different ways that you can do it. You can either do, some lenders offer what is called a deferred repayment option. Some offer what is called the interest repayment option, where essentially you just pay the interest that accrues on a loan per month. And you just pay that interest. So if you borrowed, let's say $10,000, for instance, and you paid the interest each and every month while you were in school on that $10,000 loan, when you enter into full principal and interest repayments, you're starting your principal and interest repayments on that same $10,000 that you paid. You don't have to make your principal and interest payments based on that $10,000 plus 1 year, 2 year, 3 years, 4 years worth of interest that accrued on that loan. Some lenders even offer what is called a fixed repayment option, where maybe like a fixed rate or fixed price, where you make as little as maybe $25 a month payment. Again, it helps offset a little bit of interest that's accruing on the loan, but it also gets you into the habit of making a monthly payment. And if you sometimes do have, depending upon lender, if you do have a fixed repayment option where you are paying something, that too can also get reported to a credit agency to help build your credit. So let's talk about some keys to consider when shopping for education loans. Again, some have fixed rates, some are going to have interest rates based on a variable rate. So you can see here in the top right box, sometimes fixed interest rates might be something that have a certain appeal to consumers. They sometimes can convey a sense of stability. While a variable rate can go up, it can also go down. So obviously fixed rate loans are going to be the most beneficial for loans over a long lifetime. They obviously have provided stability through extended periods of time. But depending upon, where your credit is and such and how long you plan on paying back that loan, you may end up paying a little bit more money in that fixed rate environment. Whereas with variable rates, they can tend to be more beneficial in a lower rate environment, obviously, especially if the goal, again, like I said, is to pay that loan off sooner rather than later. Commonly, fixed interest rates are going to be higher than starting variable rates, since the lender is absorbing most of the risk of those rates increasing over time. We encourage schools and borrowers to evaluate both fixed and variable rate options if you happen to have a lender that's offering both. Another element to consider when shopping for private loans, are there any types of benefits that are offered? And if they are, they can sometimes vary from lender to lender. Some of the most standard benefits are probably going to be the automatic debit or the ACH benefit. And this benefit basically is offered in the form of an interest rate reduction, maybe like 1/4% or 0.5% interest rate reduction for signing up for a savings or checking account that the lender or the servicer can automatically deduct your monthly payment from. If they go ahead and if you give them or grant them that access and sign up for it, you can maybe have an interest rate reduction thrown your way. Some other impacts of some benefits and features is that there may be repayment terms, for instance, maybe a shorter repayment term. You make larger payments, but over a shorter period of time. That can sometimes help you save a little bit more in interest. Having a cosigner release option, we just talked about that on the previous slide. If you have to go out and ask someone to help them to help you obtain a loan, that might be a difficult question to ask somebody or a difficult ask. But if you happen to present them that you need assistance with them co-signing on your loan, but there's a way that they can get off the loan and that they're only going to be responsible for it while you're in school, and then maybe for a short period or designated time after when you need to meet your obligations for payment, that sometimes can help sweeten the deal for them to go ahead and sign, because they know they won't be obligated on the loan for the entire duration of that loan repayment period. Also, another feature, it's kind of sad to bring this up, but death and disability waivers. In the unfortunate event that somebody were to pass away or maybe totally be permanently disabled, borrowing a loan with a lender that has a death or disability waiver might be able to forgive the obligation of you as well as the cosigner for having to still pay on that loan. And again, this can vary between lender to lender, so you'd certainly want to check, what lending program you're available or interested in for more details. So home stretch here. So we've talked about what are considered the traditional or main ways of funding the remaining balance. However, again, in this environment, everybody's looking for different ways to fund education. So we're going to mention a couple of other ways that we've seen that have been out there. They may not necessarily, may or may not be popular, and they may differentiate at schools. Maybe one school sees more of this, one school sees less of it, but we want to make sure that we mention them and kind of give what we consider a very, high or 80,000 foot view analysis. So, and again, this is at the beginning when I mentioned I'm not a financial advisor or financial planner, you'll certainly want to discuss these items. If you have questions or thinking about using them in the future, you'll certainly want to ask or bring up this as a potential topic with your financial planner or your financial provider. First one off is going to be your tuition payment plans. Now, you probably won't need to necessarily involve a financial planner for this, but many schools will offer what is called a tuition payment plan. And these basically allows for you or the student to be able to, the ability to spread out your payments over time, typically over a semester or even possibly over one academic year. And these tuition plans can reduce a family's need to borrow a lump sum to pay for college. Let's say that you've got $10,000 to pay for that term, but you only get it in $3,300 increments per month. And you can be able to get that and get on a tuition payment plan. And that would be a very easy and manageable way that you'd be able to pay for your education because you know you have $10,000, but you just don't have it all at once. So, this is a great way to think about doing that. It's a great way to manage your ongoing earnings. Some of the things you may want to think about with them is that sometimes these plans will have fees. Maybe a school will have some sort of an interest charge that can vary by school. So you'll want to make sure and check on that particular plan. The cool thing about tuition payment plans, however, though, let's say you don't have the full 10,000, maybe you know that you've got $5,000 that you'll earn over 3 months. You can combine a tuition payment plan with any of the loans that were previously mentioned as well. And if, by doing a tuition payment plan for some of what you would owe for a term or for an academic year, that would easily offset you having to obtain more loan, for instance. So again, you can mix and match loan and tuition payment plans if that's more advantageous to your situation. 401k plans, you can see here some of the things you may want to think about. The positives: there's no credit check or application. There's obviously relative easy access to it. You just basically access or liquidate a portion of a 401k. But some of the negatives or some of the cons that you might want to think about is that you may have to pay an early withdrawal penalty. There may be potential tax implications. You may be hurting future growth. So even though you're not necessarily having interest on this particular amount that you deduct, whereas you'd have to be paying interest on a particular loan, your retirement account may not necessarily grow as fast anymore because you have less money that interest is accruing on. So that's something that you may want to think about. Long-term investments, again, very similar to 401k. There's relative easy access to liquidate it. There's no credit check or lengthy application. But again, very similar to 401ks, they may be intended for future retirement or future expenses. So you're borrowing against that potential liquidity. And again, just like with 401ks, there may be loss of future growth. And also, too, at the time that you may need these funds, that long-term investment may not be trading at the particular dollar amount that you want it to at that time, and you may have to sell it for a loss. So essentially, your portfolio might be losing money over time so that you can liquidate a portion of that money to pay for school. Home equity loans or lines of credit, again, very similar to the previous two. There's relatively easy access to it. You do have to go to a lending institution in order to take out a home equity line of credit. But again, since you're borrowing against the equity in your home, there's typically a very soft credit pull, if no credit pull at all, on an equity loan or line of credit. So there's relative easy access. Some of the negatives to think about is that if you have to pay back or if you have to sell your home, you may have to pay back the loan fairly quickly in order to have that home sold. And depending upon who may potentially be purchasing your home, you may have to either pay it off or you may have to have some way that some of the funds that the buyer is having go towards paying that loan off. And it can kind of get cumbersome in the paperwork in order to have that all taken care of. If you borrow a home equity line of credit and then all of a sudden you need future home improvements, if you've extended your access to your home equity line of credit and you don't have any borrowing power left because you've used it all for college, you may not be able to fix up that home, or if it happens to be an emergency fix or so or something like that. And then lastly, too, there may be closing costs on potentially that loan. So again, you'll want to check with your home equity line of credit provider if that's a way that you are wanting to go, and certainly check with them on some of the other positives or negatives of going this way. And then lastly, of course, credit cards. Credit cards, we're seeing an uptick in the usage of credit cards to fund education. Obviously, one of the best traits of a credit card is that it's a super fast way to take care of your debt. Just simply swipe your card or give your number and your expiration date and security code, and boom, you're done. Some of the negatives, though, within a credit card is that there are some limits. If you only have $3,000 limit on your credit card and you've got a $4,000 bill, or let's say you've got a $2,000 bill at the school, that only now gives you $1,000 purchasing power or credit power, essentially, on that credit card for any other usage that you might need for it. Credit cards typically in the past have been looked at as the most expensive way to buy your education, because basically, you can be looking at some information, you can be looking at higher interest charges. Maybe the credit card designates certain types of purchases for different types of interest rates and such like that. So you may want to think about that. And then also too, when you swipe your credit card, there may be a merchant fee, or there may be some sort of a processing or convenience fee that's on that card. So if you're doing a $2,000 purchase of tuition on your credit card, you may be charged a 2% fee on that as well. So something to kind of think about when using your credit card. One thing I would also throw in here too, that, with the advent of rewards on credit cards, again, it's very tempting to want to use your credit card so that you can build up your rewards points and such like that. Again, although it's very attractive, you may want to weigh again what your interest rate is, what your card limit power is, what's your credit utilization rate, how's that going to affect your credit and such. That may offset any potential positives of gaining additional reward points or so in the future. So again, it's something to kind of think about. So in summation, obviously create a checklist. Think about all the different things that you need to accommodate prior to going to school. Make a plan who's going to be responsible for paying or repaying loans when the time comes. Is it all going to be on the student? Are the parents or the family going to take a portion of the obligation of paying back that loan? You'll want to do your research. There's a lot of free tools out there. We'll have one coming up here in a second. And always keep learning about your options. When in doubt, ask a question. Meet with the financial aid office. Talk to the admissions counselor. There's no bad question out there to ask in this process. So definitely take advantage of them and utilize them as services. And do it at every single school that you may potentially be interested in. Financial aid offices, although many financial aid offices try and put their best financial aid package together the first time, there may be some flexibility and such, or there may be different ways that they interpret awards and such. So, or maybe they've got extra funding that another school doesn't. So again, if you've got a question, think about asking that question to each school that you're interested in. Determine the different combinations of funding sources you will use, and then just start that process and start working on it. And again, if you've got any free time, utilizing scholarships, searching for scholarships are the best way to go. As you hopefully will see here, most of the other types of options, student loans, federal grants, state grants, institutional aid, is determined by the financial aid office. For any more information that you may potentially want to research or go out there and learn more about, you certainly can go out to Cal Coast Credit Union's website here at calcoastcu.org/financial-wellness.